This is Binance.com. It starts like this. And when you log in, you're going to have here your account. And here will be your wallet. And you will have some money in your wallet, hopefully, or put some money in your wallet or buy some money in your wallet. So this is a small example of, this is my Binance. As you can see, it has some coins here. Euro, what is this? Nothing. USDT, Litecoin, Binance, DOT, Solana, different coins, okay?
Yeah, so Alexis, what people need to buy, like we explained last time on Binance, they need to buy USDT because we are going to be trading with USDT. So they have to make sure they have the amount they want to put as a deposit in the account. So let's say, I don't know, $500, $1,000. It's up to them what their budget is. So here we can see Mr. Alexis has like 15,000, right? So in USDT.
Yes, like 15,000. Okay. So what we're gonna show today is not just buying a coin like this one. In this case, you know, there are some coins that I bought here. We saw Litecoin like this, Binance Coin, DOT, Solana, etc. But how we can do a little bit of trading is what we called the Binance Futures. And how does it work? So you should go here to derivatives and go to USD and futures.
Yeah.
So when we go here, it is showing the Bitcoin. You see Bitcoin and USDT.
Yeah, by default, it will always show Bitcoin and USDT. So let's say, for example, if we want to look at another coin, we will click on that drop down where it says USDT on top, right? So we can see all the different coins that we can trade using futures. It's called perpetual because that is a contract. So we don't do quarterly, we only do perpetual. So we have ETH, we have BTC, LTC, and all the coins that we can trade will be on there.
Beautiful.
All right.
Now, the next thing we do is we need to add some funds, correct? Is that what we do?
Yeah.
Now, in this case, of course, I already have funds here. Don't know if you can see here, it's like 22,000 here. I have some funds here, so I can play, plus some open orders here we're going to explain later. But let's make a test like now. How do you add funds? You click on transfer, and from your fiat wallet, you can transfer to your futures wallet. Remember, we said that in my fiat wallet I had 16,500, right?
Yeah.
So let's say I will transfer all this 16,500 to my spot
futures.
Wallet.
From spot to futures.
My spot wallet to the futures, to this wallet here. Okay, don't look at me playing with numbers. This is what I do. It's all right. You can do with $500, like $300, $100, $1,000, anything you want. I just like to show you, real trading here. Okay. So it says it's transferred. And if you see now, there you go. My wallet here, this is the future wallet. The future wallet now is 39,000. Okay, it's plus some open orders I have here. That's insignificant. At this moment, I have 39,000 USDT that I can play. I can do some exchanging. Yeah, it's like, okay, this is crypto, yeah? So
the next thing that is going to happen is once after the transfers of fund inside the futures account, it's not like people will be able to trade straight away, right? So if here we try to open a trade, Binance will show up a quiz, but Mr. Alexis have already done the quiz. So for everybody who is brand new to futures, there will be a quiz that is going to show up. It's like a sort of mini exams because they want to make sure, Binance want to make sure that you are held accountable that you're putting money, and your money can be lost as well in case you don't know what you're doing. You just like playing around. So they want to make sure you understand the rules. That's why they want you to do this small test, which is
So in the beginning, exactly. Yeah. In the beginning, you make a small test, you put a little bit money here, and you can make a trade here. Sometimes we are giving some ideas of which trade, like we call signals, when we see a coin that has a momentum. So we can show you something, and let's say you can like make a trade with $50, $100, whatever. But on your first trade here in Binance, there's going to start a questionnaire that you need to answer. And mainly the questionnaire is telling you that this money you're putting for trading, it doesn't mean you will win. You might lose all of it in the future. So, and when you make a mistake, actually, in the questionnaire, it gives you the chance to change your
answer.
Change your answer until you get all that right, which means until you understand what it means to trade. Okay, and this is what I always say to people: trading doesn't guarantee profits, and anything in crypto, I have not seen anything in crypto that actually can guarantee profits. But the closest you can get is like if you have a team who is looking into what is happening and hopefully get a better view of what is the market saying today and what coin looks like there is a momentum to do. So step number one, place a little bit money. Step number two, try to do a trade here, and it's going to stop immediately and show you a quiz to fill the quiz. Okay, probably we'll put something in the website also for that quiz to see the answers, and it might be easier for you. Let's see.
Okay. So we can pick a coin now. So let's pick BEL, BEL, USDT.
So we can go here and we can go to BEL.
Yes.
Coach Osman is telling us BEL, yeah. USDT. So if I click here, now it's going to show me the chart of BEL and USDT. Now here is different time frames. Normally when you start, it might start with 1 hour time frame. Okay, this is the 1 hour, means every candle you see here is 1 hour. Now this is our last hour, 2 hours ago, 3 hours ago, 4 hours ago. Okay, these are called candles. Now, if we did 15 minutes, it means that this candle is the starting 15 minutes now, and this is 15 minutes before, and 15 minutes before, 30 minutes before, 45 minutes before, 1 hour before, 1 hour, 15 minutes before. So as you can understand, these are different candles that you can see per minute, per hour, per day, per week, in order to understand even more how the market works. So if we go on an hourly, you see that the past hours, it looks like there is a momentum on this coin. But when we do trading, we like to do it on 5 minutes, so we get a better and clearer idea of what's happening. You see, we can make it bigger. If we scroll with the mouse, it goes bigger and smaller, so we get a bigger idea. So, Mr. Osman, we are here with...
Actually, on the 5 minutes, we can see the coin moving faster on this candle. Like on the hour, it takes more time to actually seeing it moving up or down. So here, it just moved like faster. So people can see it's moving faster on the 5 minutes. Yeah. So now we're ready to take a trade.
Of course, yeah.
All right. So here, at the moment, it's showing us BEL is on 108.36. Okay, so let's say we got a signal. We're going to enter at 1.079. 1.079. So if it's going to drop 1.079,
oh,
and then
something we receive. Sometimes you receive it also in your Telegram group that we can enter on this trade when the coin is 1079. So you need to be patient. If you want, you can enter now, but maybe it might fall down and might be not a good idea. So 10.79 is what Coach Osman is telling us to do now, and that's what we are doing.
Yeah. And next thing we're going to do is we're going to select between cross and 20x. So you can just explain a little bit what is cross and 20x.
So
you want me to explain for no problem.
Yes, you can explain the cross or isolated, then what is the 20x. So when we click here on the top cross, it opens two options, cross and isolated. And there are advantages and disadvantages of both different ways to do this trading. So for cross, what is the advantage?
Okay, so when it comes to cross, means like, let's say we have $1,000 in our account and we open a trade, for example, this bell, which is right now on 1.0850, we are going to open on 1.079. And let's say it start dropping, it start going to like 1.01. And when the market is dropping, right, bell is dropping. So it's going to show minus in our account because we've entered this trade at 1.079. So the amount we've put in there, the cross is going to use this entire amount. So it means even if the coin is going to go down, means you're not going to lose money, only the asset value. Except if it goes further down, then if your money is not in there, you can actually lose it all. When it comes to isolated, Binance by default is going to give you something called liquidation price. Means you've entered at 1.079, your budget is $1,000. Binance will tell you if the coin goes, for example, 0.87, you will get liquidated. Means you're going to lose your money. So here, this is a safer way of doing isolated, but it's also a risky way if market dump, because like we can see lately, BTC has been going up and down, up and down. So I don't personally recommend isolated. I prefer to use cross because we know if market goes down, it always come up. Like we've seen BTC last week, Mr. Alexis, it was 38,000, 39,000, and it's gone to 47, right? Okay. So market is always going, and we are in a bullish scenario. So I personally advise to use cross, which is good, and is good for beginners as well. So that's pretty much the difference between isolated and cross.
Let me rephrase that in a simple way.
Sure.
When we are using cross, it means that we might lose all the money that we put in a trade. And when we can do that, maybe we'll sleep in the night and by the morning it will drop down and we just lose all the money because we didn't have enough money on the savings account that we have. On the other side, if it's isolated, we have to tell the system in which price of loss we just want to sell the coin, keep the loss, and make less money. For example, if I enter this coin in a specific price like 1.079, then I will say, okay, if it goes 0.9, I suppose, or something like that, then I can sell all the coins I bought, so I lose a percentage of what I place. For example, if I put 100 euros, I will lose 20 euros or something. Or if I put 1,000 euros, I will lose 200 euros, and then I stop this trading and everything is fine. But if I am in a cross, then I might even lose all the money I traded. Now, what happens? If we do isolated, sometimes the coins go down and then go up. So if they go really down at a couple of hours, we are going to unfortunately sell the coin because we told it that we want to sell it because it was isolated. Yeah. But if we have enough money here, quite more money on the budget here, and if we have it cross, it might go down, and then after a couple of hours can go up again, and then save the trade, as we say, not really lose our money. We were patient enough to wait for it to go up. So I know it sounds a little bit complicated for you to understand, but I think it explains the point of the cross and the isolated. On the cross,
that's a simple
money, right? On the cross, you're risking all your money, but at the same time, it might go deep down and then deep up again and never sell your coins. In the isolated, you are going away with a safe loss, let's say. Okay.
That's just a beautiful explanation, to be honest, like very simple.
Yes, a little bit simpler, yes? Now,
Yeah.
let's talk about this 20x. Okay, 20x, 10x, and all that is the risk that you take as well. The less, the more you put until 50 or something, it means you're taking bigger risk and you must have more money here to cover your trade. And what does that mean? Explain it, Osman.
Yeah, for example, let's say we are trading with $100 and now we have put the leverage at 20x. By default, it's 20x. This is what Binance gave us. But we can also do 1x, 2x, 3x, 10x, 20x. But people are comfortable doing 10, 20, 30, 40, or even 50. So here, when it comes to 20x, what it simply means, like if I'm opening a trade, my account has $1,000. I'm opening a trade of $100, means I am actually multiplying that $100 by 20x. This is what it means simply. So we are trading with a higher leverage. It's like we've borrowed money 20 times. So this $100 has become 20 times more.
Exactly.
Yeah. And also the disadvantage as well is like if we are opening a 50x, means we are taking higher risks. And also when we close the trade, Binance charges fees. Obviously, we can make more money if we are using higher leverage, but the fees as well, the trading fees that are going to charge you is higher. So by default, to keep it simple, no complication, just leave it on 20x.
So basically, again, to explain it in a simple way, if we want to buy $100 worth of coins, when we are doing the leverage 20x, it means we are actually trading $2,000 of coin instead of 100. Yeah. But this has consequences in the time we lose, okay? In the time we win, we make more money because we actually traded 2,000, but we put only 100. But in case we lost, it's taking much more money from our budget here that we have covered before. Does that make sense? Is that correct, Osman, more or less?
Yeah, yeah, so, very straightforward.
It's like we are kind of borrowing money from our existing, main account and Binance, but it has more risk to make bigger amount of money, but also more risk to lose much more money after if we lose.
And this is where people lose money actually, because when we are doing 20x, human emotion, we have greed. So we always want to say, hey, let's do 20x, let's do 30x, let's do 40x. And then emotion takes over and something goes bad in the market, coin just drop with unexpectedly, like Mr. Alexis said earlier. Then when we see minus, we end up losing our money, all of it, because our balance was only like $500, $1,000. It did not sustain the amount of money that we opened for this trade. So it is because the leverage was too high. So by default, 20x is fair.
Okay, so another thing that coach is saying here is that according to this budget here, you have to think of how much percentage of your budget you will put on a trade, correct?
Yeah, correct.
Let's move to the next place now. So after we saw the price, we said 1.079.
Yeah.
Then
we're going to select the amount of money we want to open this trade. So here, when we move this slide, it's going to show underneath this buy long green button. So it's a cost here, right? So the cost, you're going to see the cost. So here we're opening 100 and we can do a small amount. You don't have to.
How much do you want? Yeah, I normally do thousands, but it's okay. Let's do less. Okay. So let's do
100. Okay, 100.
100. Okay.
All right. 99.
If you love this coin, I can do more. It's no problem.
no. I'm just giving an example. Right?
Okay. So by doing $100 on the 20x, it means I am actually trading 2,000. Right?
Yeah, it says 2,000, but it's saying 1999.3. This is a 2,000. Yeah, this is what it means. And here is 99.
This is the money cost, but I am trading like 2,000 just by putting here 100, putting here 100. Okay, the 8% is according according to what I have in my wallet. So for you, it might be much more if you don't have much in your wallet. So just ignore the percentage. You just move this and you look down here to see how much is the cost. And have it in mind, it's a good idea according to how much money you have here, not to have more than 5 to 10% of your budget in a trade. All right, so you don't risk
minimum risk. Always take minimum risk when you're opening a trade. If the coin goes down, at least you know you are safe. If it goes up, obviously you make less profit, but at least it's profit. That's the point here, because we don't want to open, like if we have 1,000, we start opening $500 trade, $600 trade. That's madness. Okay.
Yes.
So now the next thing we need to do, we need to set up the amount we want to close this trade, which is called take profit. So we say here, we're going to open
One
this
second,
trade.
Osman. Let me explain, rephrase the take profit.
Okay.
It means that now the price I want to buy the coin is 1.079. And I'm asking myself, I'm asking the signal that is given me on, on the Telegram, okay, in which price of the coin am I happy to cash out and make profits? So if it's 1.07, in which price of the coin am I happy to sell it? And it is
1.0898.
0.898. So it's almost 0.02.
Yeah.
0.02 in difference. Okay, which is like 2-3% more or less, something like 2%, something like this. So with 2%, I will be happy. Now, and continue.
Yeah, so we've explained what is a take profit. So the next thing we need to do is
we have to click on this TPSL. Okay, we have to click it in order to write 1.089, as Mr. Osman is suggesting for this specific trade.
Okay, yes, 1.0898. You forget to put the 8.
898. Okay.
Yeah. Right. So one thing we did not explain, because we don't use the stop loss because we have enough amount in our account. So let's say, for example, this trade is going down and we don't want to lose our money. We just want to be on the safe side. We can use something called a stop loss, which is going to close the trade. But in that case, you will lose the money that you have put in there. You will lose, like Mr. Aziz explained, $20, whatever you've put in there. Right. So we don't use stop loss. Should we explain this or leave it?
Yes, I will explain again what we said before. If, as you can see, things go sometimes down, up, you see? Like, if I put a stop loss here on this down, I'm actually selling all my coins cheap, and then it went up. And actually, I felt, oh my God, it got sold out because I didn't think it was going to go up. So there are two choices. Either you risk it, and you say, you know what, I'm not going to put stop loss, but I have enough here. That's why we put, like, as we said, 5 to 10% leverage. So I'm risking that when it goes down, most likely it will go up again, so I will recover the loss. Or I say, you know what, forget about it. I'm going to put here that when it goes down here, I'm going to sell it no matter what, just in case it can drop even more and I lose even more. Don't worry, this video is going to be on a replay. You're going to hear it again and again, and you will understand it, because it's very, very powerful to learn how to trade. And, if you have a budget, I'm sure you would love to do it in the future yourselves, because you can make money every day, if you follow some fundamental basic rules without big risks.
Actually, the stop loss, it's an emotion thing, because right now we are all together looking at the chart right now. It's saying 1.086, and nobody can say this coin is going to go 1.05 or is going to go 1.098, right? We can only predict, we cannot guarantee. So if you're playing with $1,000 or even $2,000 trade, you've opened this, and the moment this goes to 1.06, you're looking at your balance, which says like minus 2,000, minus 3,000, your heart start beeping. That's why we use the stop loss, not to like feeling overwhelmed. Oh, a lot of money is gone, right?
Yes.
Okay, so
in this case, we either put a stop loss, which is, let's say, 1.0, how much? Let's say somewhere
1.04, 1.03, because the last one was
0.3. Yes, I was going to put 0.4, you 0.3. Okay, so if it goes here to 1.03, I say, hey, you know what? It's like really, where is it? 1.0.
yeah, it's not showing because you're on a 5-minute chart. If you put an hour,
yes. Okay, so it's somewhere here, somewhere down here.
Yeah.
All right, so we cannot, I mean, if it goes here, it means something is wrong with the market. I slept and everybody sold Bitcoin down and started going down or something like this. So 1.03, I say, you know what, instead of losing all my profits, I will lose a little bit of my of my investment, and I'll just keep the rest, and hopefully for the next trade to be a win. So shall I do it or not now?
No, don't put the stop loss because it's a 5-minute short. So we don't use stop loss 5-minute short.
Okay.
So the next thing we're going to do is just open the trade now. So we're just going to open the trade.
We just click on buy long. This is how we open the trade. But as you can see here, I want to buy lower than what is now, which means I will not buy. I will wait until it goes lower.
Yeah.
Correct? Yes.
Yeah. Click buy long, right? And now it says order submitted. We got a notification. It says order submitted. It's
so
gone.
If I go here, you see,
open orders.
Here is the order.
Open orders. Right. So it's pending now. It's pending. Open orders means
order. These are previous ones. Okay. This is the last order. By the way, I sold the previous one. Osman, I made 150 euros and I sold it. So I'm happy when you send the notification. So we had 3 days here today. So now what is practically going to happen? The system is automatically going to wait when it drops a little bit down 0.079.
Yeah.
Right? How many coins?
$2,000
coins in the price of 2,000. 100 is what I did. So it's going to buy 2,000 coins with my existing 100 coins that I put in, USDT that I put.
100 USDT, yeah.
Okay. Now, after you buy, you're going to start seeing here that the order is already positioned.
Yeah.
And you should not be afraid when you see a small percentage down from your order. It's not the end of the world. Why? Because you're opening a position for a couple of hours or 1-2 days. And what happens in the market? They go down, up. So now might be a moment when these 2 coins that I opened a couple of hours ago are going down. I opened them a bit up, maybe they went a little down, and now they might go up. So never get panic, even if you see things going negative, because the team is watching, the team is looking at specific coins that have potential. They're not just telling us any random coin to do. And in this case, you know, like this coin, IPC and Litecoin, they are very, very steady coins for going upwards, especially in a bullish run that we are now. We are in a quite bullish trend now. You know, the last 2 days we see quite a very nice rise in Bitcoin and cryptocurrencies. Shall we explain a little bit the margin ratio here, the percentage of risk we are taking?
Actually, we can just show the ICP because you've already opened the trade, then people can understand what is this.
So if we go, all right, ICP, I have it open here, but I'm going to show it also here. So we can go and write here ICP, and it's ICP USDT, and this is ICP. There you go.
And guys, please understand, coin has to go down in order to go up. When it goes down, it's not a bad thing. If it goes down too much, then it's a bad thing. But if it has to go down, we call this pullback. A certain coin has to go back and then they go up. Coin doesn't just always go up. That's what we have.
Let me show them something to understand. All right.
Yeah.
Now you see the 5 minutes chart, which means every candle you see, every line you see here is called candle. It's every 5 minutes. Okay. So actually here you are seeing less than a day or something. Now, if I go to the 1 hour chart, then I start seeing a couple of days, because every candle is 1 hour. So 24 candles is 1 day, is what happened today. Another second day. Now listen, when I see this now, what do I see generally on this coin? I see probably that things are going great the past day or so.
Yeah.
But if I see the 5 minutes, I might get a little bit scared that, hey, you know what? It looks like it's going down. What's happening? Is that funny?
Yeah.
Now, if I put 1 day, which means every day what's happening, not a big deal, but you know, from here to here is a lot of money to make if you trade correctly here. You see, so generally, you know, in the market, if you go on a daily basis, means this line is every day. Yesterday it went very up, today it went little up, 2 days ago little up, and before it was down, and then up and down. Okay, so, but if we go back, whoop, when is that?
37.87.
This is which day? Which month is this? On the first
of it's on the 9th of January.
In the 9th of January, it was very high, and then it dropped down.
Yeah.
So when you see something now on a daily basis, you're actually understanding that on the 5 minutes chart, this up and down is totally insignificant to worry about. That's what I wanted to show to people to understand. You know, if they go 5 minutes, 15 minutes, an hour, 1 day, 1 week, they will get a bigger picture of the total, what is happening in the market with a coin, and that even, you know, in a day or in a couple of hours, you can just profit from this Binance Futures. And the truth of the matter, because our team is very good, I'm telling you that many times we have much more profits than loss in any trade. We just have to be patient and wait for this small loss you see here to become a profit. Okay. For example, so this has, I will tell them so they don't worry. This trade here, it has $6 loss. Now it has $2 profit from $1,000 that I placed. But this one has $200 loss from $1,000. Oh my God, I'm getting scared. I'm not getting scared, because it's going to go up like it went down. Now this one, it started going more up now. It's going to go up. So it depends on the amount you have, the amount you're willing to invest. And as you see, I trade with $1,000, which is on a leverage of 20. It means I'm trading with $20,000. Yeah, for a lot of you, it's a little bit insane, of course, and I must have a big portfolio here to keep up with this, what I'm promising to play. It's all right, but you know, this is me. I just wanted to show that if your CEO is not involved grandly and majorly in this, how can you trust this industry yourself, or trading or Binance Futures, okay? But it doesn't mean you have to trade on a 20x leverage, which is more risky, or 10x. You can trade less, or you can trade 20x and you can trade with less money. For example, you can trade with $100. What does that mean? If you trade $100, this would be $21 loss. Not a big deal, right? And on the other side, you can make $20, $50 in 1 day, which $50 in 1 day from where? From just trading. It's not bad. Is your meal, is your dinner with your wife? Wonderful, right? So it's all up to your own budget, your risk taking and all that. The good thing is that what we do in our private channel, we are always trying to give you the best possible according to what we see that is happening. And as I say to you, watching these two negative, it doesn't mean they will stay negative. Yeah. I had another trade, you didn't see it before, that it went positive, very positive, like 150 euros profit in like 30 minutes. And I just took the profits and I said, great, I made 150 euros, great, no problem. On these trades, they are just going a little bit negative, which means they are going a little bit down. And I'm just waiting to go up again. When they go up again, it will become even. It will probably become profit. And then when they become profit, I can cash out and make profits. It's all about how stressed you get, how stressed you don't get, how comfortable you are to trade without worrying. I don't know if I say it right, Osman, yes?
Yeah, you said it right. Yeah, yeah.
Is there anything else we need to show here?
Yeah, just on your open orders, scroll down so people understand these things. I mean, you explained that, right? The size, I mean, on the position, you showed the size, right? Position.
Again, let's show it again. So here I have the bell that still we didn't buy because this coin didn't go to 0.079. At this moment, it's a little bit higher still. So we didn't buy it, we're waiting. On these two orders, we already bought the coin in which price?
Yeah. And guys, what you're going to see here, the reason it's showing take profit market sell means because when you set the take profit, it's going to show on open orders. So take profit for LTC, we are showing ICP, right? So for ICP is 25. So when it reaches 25, because we just saw ICP is 22.21, right? 22.21, whatever it is on the chart. So when it reaches 25, this is going to close automatically. It's going to close automatically. It's right now 22.28.
22.25. So if we go here to the open orders, when it goes to 25, there you go.
Yeah, it will close.
I actually, this is the price I bought it, right?
Yeah.
37.
No, you need to go on position to see the actual price you bought on position.
On position, 22.3. So I bought it in 22.3, correct?
22.35, entry price. Entry price.
Entry price, 22.35, and now it's 22.29.
Yeah.
So it's a little bit lower, right?
Yeah.
And
so
the other one I bought it $131.85, and now it's $131.53. You see, it's only a few, I don't know, 30 pennies of the dollar less. It's not that much down.
Yeah. So mark price means market price, guys. So when you see mark price here, this is what the market is happening. It's showing you live what is happening in real time. This is the price is happening. So 22.331 is the live price, and it keeps. That's why it keeps moving, right? So
here I see the price that I bought it, and here I see the price that is right now. And because right now it's a bit lower than the price that I bought it, it shows me exactly the equation of how much percentage I am in loss. Okay. Yeah. So in this one, I'm 4% loss. This is 2% loss, which is nothing. It's fine. No problem. Next one.
Yeah. Okay. So people understood that. So the next thing we need to explain about the risk ratio, right?
Risk ratio. Yes.
Yeah. Okay. So
here, I went back to the BTC. The risk ratio here, why was it showing before 2 point something and now 3 point something?
Because you've opened a new trade. You've set up a new trade.
We opened a new trade and we're waiting. Okay. Yeah. Should I keep this trade or close it, Osman? What do you think? Should I keep it there? What do you suggest?
Keep it on. Keep it on.
Yeah, it's just $100, so it's nothing. I mean, $2,000, which is nothing. It's all right.
All right. So here, because Mr. Alexis has 2 trades open and then he has one on pending open, which is not open yet, right? That's why his risk ratio, I think it was around 2 earlier, right? It's moved to 3.53. So here, it means the more money that you're using in your trade, the higher your risk. So Binance is showing you your risk. So to be a safe trader, to be on the safe side, we have to keep our risk under 3%. So under 3%, it's very, very safe. Above 3% is still safe. 5% is still safe. The moment it start crossing over 5%, then you're at risk, because if a coin start dropping and you have open, let's say 5 trades, 6 trades, then your risk is higher because you're putting more money into trading, and then your risk is going to go higher. Binance is going to show you your risk is going to higher. And then what happens if one of your trades start going low when we are doing cross? Binance is just going to make sure all your trades actually go into loss. This is the very bad side. That's why Mr. Alexis said earlier, you need to have enough money in your margin account, into your your Binance account, so that when you open a trade, it has to be according to your budget. So we call this risk management. Risk management means the lesser the risk in Binance is showing us, the better it is for us, right? So maybe Mr. Alexis can explain in simple words. I don't know.
Yes, I just refreshed to show the new amount because I had a lot of tabs open. There you go. So yeah, in this case, of course, I have a lot of money here, but as I said to you, what I am placing here that you see $1,000 is $1,000 out of my 40,000. So you have to be thinking about maximum 5 to 10% of your portfolio. So if you have here $1,000 instead of 40,000, you need to trade with about $100, $50, $70. It doesn't matter. You can still make money, right? Because if you learn how to do this, you can be making some money on a daily basis. Oh my God, we went on a positive in one of them. Can you see? So, oh, look at that. $11 profit now started happening, this one profit. But you know, this is the kind of thing that you should not make you not sleep at night. It should just be like a nice, funny game. And hopefully, you know, the odds are on our side throughout the week or the month to make a profit. Many wins, a couple of losses. In the end of the month, we make profit. So you have to decide yourself what is a reasonable budget according to your money that you have and you can risk. And you just have to take it easy and not worry in the night and wake up 2 o'clock in the morning and check it out. And then after 1 hour, check it out, because I don't think you're going to have a very pleasant night.
Yeah.
Look what happened here. Look what happened. Look. All of a sudden, I am in $83 profit, 6-7%. Look what's happening. All of a sudden.
ICP is going up. It's gone to 22.42. And you see, guys, this has to be a lot. So 22.35.
When we started, it was like $100-something in a loss. And now we're finishing the Zoom and we are $83 profit. Now, if I'm happy, I can just click here, market, and instead of waiting for the coin to go to the price I wanted, which was 25, to make much more money, I can just click here and I say, I'm happy to make only 83 euros for this trade. Goodbye, thank you very much, and goodbye. It depends how much a gambler you are. You know, if I was not a gambler, I would click here, the market, 65, 50, now it's going 50 euros. I will keep it, 65 euros, I click on it, I keep it in my pocket. Thank you very much, 65 euros, I take my wife for a nice dinner and forget about the trade for today. Or I can keep it because I want to reach 25 and this is going to be maybe $500 profit for me. Yeah. So it all depends how much you want to risk it. You understand? Maybe some people...
It comes to patient as well. So people wants to be patient and hold it for a bit long time. Like maybe this will take couple of days, sometimes a week. So if you hold, it's better because, you know, like we said earlier, we are in a bullish market. Like market is going up. So we know this coin is going to go up. So better hold it. But if you are somebody who wants to take a small profit, I'm not saying a small profit is bad. So you can. So you just take a trade when the signal is being posted, you take the profit, wait for a new signal, right?
Wonderful, wonderful. So in this specific trade of ICP coin, after half an hour, look the coin how much it gained in price, and I made 740 euros.